pools of money that I would never have had access to had I not been licensed. So, all those things combined has really made our company grow, I think, faster than we would have if we weren't doing the broker-dealer.
You're listening to Ice Cream with Investors, a podcast that is dedicated to teaching you how to better invest your money so that you can live a more intentional life. I'm your host, Matt Four, and it is my goal to teach and empower you to remove the roadblocks to your financial success.
All right, Tim, welcome to the show.
Well, Matt, it's been a pleasure to be invited onto your show, so I'm happy to be here.
Yeah, well, we like to start with the difficult questions here. What's your favorite ice cream?
The all-time favorite ice cream, it was a hard decision. I had to pick between two, but I'm going to go with my gut, and that's cookies and cream.
Love it. Love it. Now, you, judging by the accent, you're not from Alabama, so you're obviously in New York.
Yes.
If we're ever up that way, where's the best ice cream we can get in New York City?
Oh, my gosh. I mean, I got to be really honest with you. I have not been to Manhattan in a really long time. But in Queens, I will tell you that there's the Corona Ice King. And if you ever heard of Italian ices, this is the original spot. It's been there for 100 years. It's still old school, no frills, and they have the best ices you can get. It's on 108th Street in Corona, Queens.
Nice. I'm coming up that way in October, so I will have to check it out. Well, tell our listeners, what's the scoop? What do you do today?
So I still work as a New York City firefighter. I'm a lieutenant now in the borough of Queens. That's how I know about the Lemon Ice King. But before then, I was a firefighter in Brooklyn, a town called Crown Heights. And it's been the ride of a lifetime. Previous to my real estate career, I had a side job as an ER nurse in a level 1 trauma center. So I went from, the high stakes games of firefighting into the ER, and that's how I lived my life. In my 20s and 30s, and it was good. I mean, life was good for a while, right? I always had steady work, had the overtime. My wife got to stay home in the beginning with our oldest daughters. It was fine. 2 vacations a year, maxed out to 457. Bills were paid. There wasn't a lot to complain about, except that I didn't have my time, Matt. And at the time, I didn't understand what that meant and how valuable that was. But looking back, I can totally tell you that it's caused, some regrets on how I ran my life. So today I am still a firefighter. I got 22 months until I hit my 20-year anniversary, which means that I'll be eligible to retire with a pension and benefits. And I also am a co-founder of a small private equity shop called Cityside Capital. It's me and my brother Greg, who lives down in Virginia. And we connect retail investors, 1031 exchange investors, and institutional capital to commercial real estate deals through a vetting process that my broker dealer undertakes. So I'm happy to dive into any of that.
So a couple questions before we get into the real estate stuff. So I don't know much about being a firefighter, and I don't know much about being a nurse either, but I do kind of think I understand their schedules are like, hey, you're going to work 2 days in a row being a firefighter, have a couple days off, and then come back and do the same. And then nursing's probably pretty similar, right? So were you just working 24-hour shifts as a firefighter and then taking a nap and then doing 24 hours as a nurse? How in the world did you juggle that?
Good question. So yeah, you're mostly right. I traditionally, firefighters in New York City, at least, we do 24-hour shifts, right? So it could be a day into the next morning, 24, or it could be the night. You start in the night and you work until the next night, and it's never the same. There's no A, B, C, D chart like a lot of departments have, where you always work the A shift every time A comes up, And then in the ER, I did, generally speaking, I did 12-hour shifts, right? 7 to 7, 11 to 11, 3 to 3. Sometimes sometimes I do more, 16 hours, if I took a little bit of extra time. Or sometimes I would just do 4 hours, right? They were just getting crushed and they put out a text for an SOS. Hey, we need somebody for 4 hours to come help out with the, acute patient acuity and, volume. But generally speaking, I would do 24s and 12s. And,
wow.
That's kind of how that's how I did it. Yeah.
What drove you to the nursing side? I mean, I've heard that a lot of firefighters have kind of that extra time on their hands, so they're always kind of tinkering and trying to find something to do. Was it that, or was it income? Like, what drove you to that?
So there's two things. Number one, I am not handy. So like, you do not
Same.
want to have a hammer in my hands, even though I'm into real estate and everything. Everyone's like, how is that possible? You're a firefighter who's, you should know how to use tools, and you're into real estate and you don't know how to use tools. And I'm like, check and check. It's so bad that my wife won't even let me hang pictures on the wall in my house. Like, I just have to have somebody do that. So embarrassing, yes, but hey, listen, I wasn't cut out for like the HVAC technician or a contractor or electrician or anything like that. So like, so that's one thing. That's what a lot of guys do. So the second thing is I like to joke around that I was pre-med for about 15 minutes in college until I joined a fraternity, and I think you guys can understand why I was only pre-med for 15 minutes, right? So I always had like that, and I was an EMT at 18 years old. I wanted to be a physician. And so, like, I had that, in me, that altruistic kind of streak in me, number one. Number two, I was already involved in emergency services, helping people in their time of need. Like, that's me. I want to be in the room. I want to be helping. I want to do all that stuff. So it was really a natural fit. And I worked with a bunch of nurses. I worked with 3 nurses at my firehouse, and they had the nice cars. Their wives didn't work. They had steady side work whenever they wanted it. So there was just there was a symbiotic relationship between the two careers.
Gotcha. Well, you mentioned a broker-dealer earlier, and I didn't know this about your story, so I'm super interested in asking you these questions. So there, in the form of real estate, there are co-GPs and co-sponsors, there are broker-dealers, and there are RIAs. Co-GPs are responsible for the property. Broker-dealers help with the underwriting and finding the assets and kind of connecting the investors. But could you help us understand a little bit more about what is a broker-dealer, and then I'd love to know like why you went that route.
So I'm going to push back a little tiny bit, Matt. Right? So
Perfect.
Broker
Good.
dealer.
I don't know anything about this, so this is good.
So this is, but this is good because when I say the word broker dealer, people they shake their head like oh yeah, broker dealer, because it just sounds like they should know what what it is. But it's very different from like a commercial real estate broker who's sourcing maybe some deals or something like that. A broker dealer is on the capital raising side, right? So if you think about Goldman Sachs, J.P. Morgan, any investment bank or wirehouse, like those are broker dealers, right? Like those are broker dealers that focus on stocks, bonds, ETFs, mutual funds, stuff like that. Where our broker dealer focuses on private placement investments in commercial real estate. We don't do stocks, we don't do bonds, we don't do ETFs, we don't do anything else. We're not an advisory firm. We don't make recommendations. Basically, what my firm does is we do the vetting process for suitability purposes, right? So we will vet the operators and make sure they say who they are, who they say they are, that their track record checks out, that they owned the properties they said they're owned, that the LLCs are in good standing, all the due diligence that maybe a retail investor wouldn't really understand how to do or what to do or, how much it costs or anything like that. On top of site visits, and we have an underwriting team that goes through, the operators that we work with, that goes through their underwriting assumptions and stuff like that, so that when we do put a deal out to our investor base, they kind of know that, Cityside Capital and through our broker dealer, we have kind of done some of the due diligence that we need to do to say, at least I like this deal, right? Greg and I, my partner Greg and I, we're going to invest in this deal, and we put it out to our investors.
Gotcha. So why did you decide to go the route of broker-dealer versus like a co-GP? Can you talk us through that?
Great question. This is a very murky topic, capital raising, right? Because when folks hear about, commercial real estate, whether you're in a mastermind or you're in an education platform or you're like, wow, like that sounds incredible. I want to get in on the general partnership. Like I want to be on the GP. I don't want to just be an LP, right? Meaning the general partnership versus the limited partnership. One of the ways that makes, let me back up. Commercial real estate's a team sport, right? So you might have somebody who's really good at acquisitions, guy that's great at contracting type stuff and renovations, and you have an underwriter, you have a insurance guy, finance guy, and then you have the capital raising side or the investor relations side. And that's not always the glamorous part of the job, right? Like it's kind of high stress to kind of get the capital together and, figuring out the capital stack and getting people to wire on time, investor communications. It's not the sexiest part of the job. So, so people can jump into that spot and say, you know what, I can get onto the team by raising capital, except that you really can't if you don't have what's called a substantive role in the management of that asset, right? You could be the acquisitions person, or you could be the asset manager, or the property manager, or the underwriter, or you could be the insurance numbers guy, or you could be the boots on the ground. Like there's so many ways to be involved in the running of that asset where you can check the box and be totally safe. But if you're not doing that, you're just raising capital to get onto the GP, you're essentially selling securities without a license. And that's a big deal. That's fraud, and that can get you in prison. So when I learned about all this, beginning in my journey a couple of years ago, I like to sleep, Matt, and I like to sleep well at night. So I said, I don't want to play the game of, let me raise capital for deals, and how can I build a business around this, right? Because I had already done 3 deals by partnering with other folks. But the capital raising was something that was attractive to me and my brother Greg. And we weren't going to be leaving New York anytime soon where he's in Virginia. We weren't going to be moving to Phoenix or Austin or Dallas or Florida. That just wasn't on the cards for us right now. So we got introduced to a broker dealer that was, basically sent from heaven, because that's exactly what we wanted to do. We wanted to get our licenses and join a broker dealer that only focused on this kind of niche. And that's basically how this journey started.
Yeah, you said you like to sleep, but I'm going to push back on you now and say that you had 2 stressful jobs with 2 jobs that work long hours. I don't think you do like to sleep. I was wondering when you would sleep in that.
And I have 3 little girls, 12.
And you have 3
4.
little girls.
Yeah, so now you know why I desire to sleep at least a little bit at home.
Yeah. No, and I appreciate you explaining that, because I've gone and done a couple of speaking engagement conferences talking to friends here recently, and they all say the same thing. Like, I can bring capital to a deal. I want to be on the GP, et cetera. And I'm like, whoa. Like, you've got to do more than just that. And I always encourage people to make sure that they are doing more, documenting more, because it will throw you in jail if you're doing this incorrectly. So I appreciate your perspective of like, hey, I only kind of want to do this portion of the job, so let me make sure I'm doing it in the right way.
And Matt, let me just stack on top real quick. So a lot of these deals are done under a Reg D offering, right? It's called it's an exemption from having to file all those documents that like an IPO has to do, right? So there's a 506B and there's a 506C, right? And that's under a Reg D exemption. Because of that, that's why the securities laws are in the mix here. Now, if somebody like Cityside Capital was the operator, right, I was going to go out and find the deal. I'm going to get the debt. I'm going to do the due diligence. I'm going to do the underwriting. I'm going to do the asset management, the property management, everything. I can just go raise capital for my deal. It's my deal. I'm the general partner. I'm doing all the things, or I have a part of all the things. I can raise as much money as I want. I can raise millions and millions and millions of dollars, and I can still sleep well at night. It's when people want to come into the deal on the side, right, and say, listen, I can bring capital to a deal. I just want to be a part of that general partnership, and I only want to get paid for bringing capital to the deal. I don't want to do anything else. That's when we run into problems.
Yep. So you're, I think, might be the first broker dealer I've had on the show. Can you talk us through? Somebody's out there listening. They're like, hey, I do only want to do the capital raising side of it. I don't care to do any of the asset management, all that. What are some of the qualifications or licenses that you have to be a broker dealer?
Great question. So the route that I took was 3 exams, right? Something called the SIE, or the Securities Industries Essentials exam. And anybody can take that, right? You could just, buy the book, study, or take a class, study, and take that exam. Once you take that exam, then you have to be sponsored for the next 2 exams, right? So every broker dealer is a little different how they want to run their shop. But our broker dealer wanted us to have the Series 82 license, right, for the private placements, and the Series 63, which is like what's called the blue sky laws, which basically anybody in finance has to kind of take the 63 or the 65. So those were the two. That was the route that my broker dealer wanted me to take. There's also a Series 22 that other broker dealers in this space, who I now know, have taken the 22 instead of the 82. But also the Series 7 for like stockbrokers and general securities license, basically. That can suffice for, depending on what kind of avenue you want to go down. The Series 7 can trump the 82 or the 22.
Gotcha. And then what are like general cost for taking those exams?
Reasonable. A couple $100, I believe. Don't quote me, but I think it's a couple $100 at like, your local, testing. I took it at like a storefront, testing agency. I forget what the name of it was, but yeah, for those latter two of those series exams, you have to be sponsored by a broker dealer to take those exams.
Gotcha. As I've done investigation in this space, I've also heard the term RIA come up as well, Registered Investment Advisor. Did you look at that path at all?
So RIAs are on the other side of a broker dealer, right? So those are the folks who have to take, say the Series 7 and the 65. The 7 is the general securities license, where you can actually make recommendations to folks about, hey, I think, you're 40, you've got kids, you're married, you have a good job. I think you should do X, Y, and Z investments, because here's why, right? And you can make recommendations, and, they're called financial advisors, or, the RIA, financial advisor, that's what they do. They make recommendations based upon your age, your income, your goals, timeline, health, life insurance, all those, and they kind of have a holistic picture. The problem is that RIAs get paid. Well, most of the RIAs get paid by assets under management, right? Some of them are fee only. You can search up fee only RIAs, where there might be a flat fee for the year, or consultation, or whatever it might be. But otherwise, if you get into the bigger numbers, high 6 figures, 7 figures, 8 figures, you're paying 1%, plus or minus 25 basis points or something like that, for them to be your financial advisor. And the problem is they don't get paid for, or there's a very gray area when it comes to real estate. Because say they work for, and I'm just going to throw out XYZ Bank, but it might be LPL Financial, or Mass Mutual, or Goldman Sachs, JP Morgan, whatever it might be. If the real estate is not on their platform and hasn't been vetted and everything, there's no way you're ever going to see the deals that, say, Cityside Capital does, or maybe the deals that Matt does, because they're too small, or they haven't been vetted properly. They're not ready for institutional type investments, or, it's a private placement. So if a financial advisor has, your interest, for your money, and they're getting paid on that, say it's $1 million, and you want to take 500,000 and put it in a deal with Matt, well, guess what? They don't always know how to get paid for that 500K, so they don't want to let that go. Yeah. That's let's be honest, that's what, $5,000 a year that they're never going to see again, potentially, right? So they're not incentivized to show you private placement deals, because they don't know how to get paid on it, and that's a code that I'm trying to crack. So if anybody out there is listening to this, I am all ears, because I have myself, my brother, we're about to onboard a Wall Street guy into our firm. We have my broker dealer working on this. I've had multiple calls with multiple groups about how to bridge the gap, because I feel that the RIA channel is woefully underserving their clients by negating this entire alternative asset class.
It's funny because as we were getting involved in the space, I, like you, like to sleep. And while we have substantial time, energy, effort, blood, sweat, tears, a lot of airline miles involved in the properties that we have, it just made me want to sleep better at night and look at these other options. However, when I had a conversation with the only person I know that's an RIA, he said exactly that. He said the SEC hasn't figured out what we're doing in real estate yet, because really private syndications were only open mass to the public in the 2012 Reinvestment Act or something like that. So before then, they were 1913 laws, I think, 1933, 1913 Securities Act. So it was written in a time when this wasn't an option, and that's exactly what he said. Is like the RIA community just hadn't figured it out yet. How to and how to make this all work.
That's exactly right. So it was the Jobs Act of 2011, I think, or 2012, that had the Reg D, 506B, and 506C offering. Well, the 506C offering, where if you had only accredited investors, you can now market that. You can go on radio, TV, podcast. You can put it up on your website. You can send out mailers. Like, before that, you had to know somebody with a substantive relationship. Like, so where were those conversations happening, Matt? Right? They were happening at the yacht club and the golf club, and if you didn't know anybody, then how do you learn about these private placement deals? So like, this is private equity for the common folk kind of thing, right? So, I think in 2011, 2012, that began to shift, right? So it's still very new. So, for example, I went to an alternative investment conference in Buckhead, Georgia, a couple months ago, where I thought this is going to be great, right? We're going to talk about alternative investments. And I'm telling you, it was all RIAs and money managers. And they thought that I was crazy. They thought that I was risky. They thought, what am I even doing here? Because to them, real estate means whoever is on the level on a real estate investment trust, in interval funds, opportunity zones, and they didn't want to know anything about private placements. They didn't want to know anything about one-off, 400-unit apartment deals in Dallas, because that was completely out of their comfort zone. They don't know how to get paid for it, and they don't want to even talk about it. I walked out of there, I was like, holy cow. There's an untapped resource here. These people are crazy for not even investigating the possibility about what is out there. I mean, Matt, I've listened to some of your shows. There's car washes, there's self-storage, there's multifamily, there's triple net leases. I mean, there is all sorts of things out there that people maybe don't even know about, but their quote unquote financial guy will never tell them about, because either he or she doesn't understand it, and or they can't get paid on it because they haven't cracked the code.
That's right. And that's why, by the way, you don't see some of the offerings that you all do or some of the offerings we do in Fidelity, because they haven't figured out how to get paid on it. And it always cracks me up to hear like real estate is an alternative investment, but GameStop or all these SPACs that you saw 2 years ago aren't alternative investments.
Hey, fellow investors, before we dive into our next segment of the show, I wanted to take a quick moment to talk to you about a fantastic opportunity for you to invest with me. As you know, here at Ice Cream with Investors, I'm passionate about real estate investing and helping you navigate the exciting world of wealth creation through real estate. And that's why, for the first time, I'm thrilled to tell you about an opportunity for you to invest alongside of me. Over the past 3 years, I've been investing in multifamily, mobile home parks, car washes. I've even become the bank and lent out money to fellow real estate investors on a short-term basis. And now you can come join me. If you would like to jump on a call and learn more about this opportunity, head to icecreamwithinvestors.com/invest and find a time for us to connect. And now back to the show.
Yeah, and listen, like I have to be very careful about what I say now, right? Because there's compliance, and we have a compliance officer, and I have my licenses, and I can't make recommendations, and I can't talk about. Believe it or not, we can't talk about internal rate of return, right? We have to give a range. We can't even give a range. We have to give like a sensitivity table on our deal decks about internal rate of return. It's crazy, right? But we got to color inside the lines. We have to play by the rules, right? And a lot of these rules are, in my opinion, are a little bit archaic, because I think there's people that really want to know about these deals. They want to know, this may or may not be for me, but at least want to know about it, right? I mean, put it in front of me and let me decide, or help me understand it, right? And if you're working with a subset of RIAs that don't understand it, then you're just never going to hear about it.
Yeah. How do you think going through this process as a broker-dealer and the licenses, et cetera, has helped you evaluate or understand offerings a little bit better?
It's given me a great education around, rules and regs, compliance, finances, debt structures. You really kind of dive in deep to the plumbing, to the financial plumbing behind these deals, right? Because at the end of the day, it's a security that we're basically selling to investors, right? We're selling an interest in a multifamily or a self-storage or whatever. So on top of having my own knowledge about that, my self-education, my mentorship, and everything like that, it's been so helpful to have a broker dealer to basically lean on for, advice and deal structuring and underwriting and asking questions and pushing back or getting clarity. But having, the legal team behind us, right? Having the accounting team, having the underwriting team, all of those things have helped us grow as a company. It's been able to, it's opened up doors for me for companies and money, pools of money that I would never have had access to had I not been licensed. So, all those things combined has really made our company grow, I think, faster than we would have if we weren't doing the broker dealer.
Yeah, I think one of the key people you called out during that was the underwriter. As you know, when you start looking at some of these deals, the offering memorandums and the investment summaries have a very, very, very high level view of how these underwritings are done. And then what you don't see is the spreadsheet behind it with literally thousands of rows of if-then formulas and data and all that kind of stuff. And man, if you're off by a decimal point on some of those, it can widely change the assumptions of an offering. So I think having that is very, very key.
Listen, I have never sat in on a investor webinar, either as a LP or through my role here at Cityside Capital, and heard anybody say anything other than it's conservative underwriting, right? I've never heard somebody say that we have sketchy underwriting and sketchy assumptions and, a 30,000 foot view on our project here. So who wants to invest, right? To me, I think, Matt, being a New Yorker, for better or for worse, like, you're guilty until proven innocent in my mind, right? And that's just kind of how I grew up. That's just like the lens through which I've viewed life, right? And my wife is working with me on that to maybe be a little bit, nicer. But, but that comes to my money too, right? Like, I didn't grow up with a lot of money, right? So I think with those two frameworks, I really want to make sure that I'm dotting my I's, crossing my T's, because not only am I investing my own capital into these deals, my brother's capital, and my dad's capital, and my uncles, and my aunts, and my cousins, and my college roommates, and my neighbors, and my colleagues, but I have people that meet me on podcasts, or I meet them at conferences, or I meet them at dinner, or I meet them in all sorts of places, right? And they become my investors. And I owe it to them to really know the numbers, right? To understand the numbers, the debt structure, how are the returns going to work? What are the taxes going to be like? There's a lot of different avenues that goes into a private placement. And I think that's why, we have to have complete education for not even the RIAs out there, but everyday retail investors, 1031 exchange investors. I mean, there's just a ton to learn. And we're trying to make this passive for people for a reason, right? Because they're too busy to really do this by themselves, or they're a physician, or they're a surgeon, or they're an engineer, or they're a school teacher, who knows? But they don't have the time or the knowledge or the know-how to do this by themselves, which is why they're relying on a firm like ours, Matt, to help them out.
Yeah. I'm just laughing because I can't imagine joining a webinar and they're like, we went really aggressive on this one. Boy, if
Super
anything changes
aggressive
in the economy, this is going to tank. But go ahead and invest.
Listen, right now deals are hard to come by, right? So I was on a webinar recently, and, the going in cap rate was, I think, 4.5, and the exit cap rate was a 4. I mean, that's
wow.
a negative 50 basis points over a 5-year time horizon.
Wow.
And just so listeners know, right? If you're going in at a capitalization rate is nothing more than if you buy the property in cash, what the expected yield would be, right? So if I bought this property in cash, I get a 4.5. So they call it a 4.5 cap, and that's a measure by which we evaluate properties' value, right? So the higher the cap rate, the lower the price. The lower the cap rate, the higher the price. So if we're going in at 4.5, and you're saying to me over the 5-year period that we're going to be exiting at a lower cap rate and a much higher valuation, wow, right? That's not conservative. I mean, that is aggressive. And I couldn't believe my ears. Needless to say, I did not put my money into that deal as an LP. I simply turned off the webinar at that point, and I went about my day. But it's knowing things like that and educating investors, through our newsletters or through podcasts like this and Matt's podcast here. It's by listening to folks that are doing the thing that you want to do that you can get the incredible amount of information.
Do you want to go ahead and tell our listeners which Instagrams they should block and not follow? Who's pumping that deal?
Oh, you know what? Listen, this is a very, this is a very small neighborhood, commercial real estate, right? So you need to play nice in the sandbox. But it is a topic of concern, though, right? Because if you have had a liquidity event, or you just have money that you want to invest in real estate, but you don't want to be the landlord, and you all of a sudden you go to Google and you type in passive investing opportunities, Nashville, Tennessee. You have no idea who's going to pop up, right? And what makes them qualified. And they could have the sexiest website and the coolest deal decks and the most fancy automations and email sequences that you've ever seen in your life. But does that make them a good operator? Does that make them a good steward of your capital? Are they shady underwriters? Are they aggressive? Are they conservative? So this is where the education piece really comes into play.
Yep, 100%. Well, Tim, we didn't even get to dig into all of the things that you're doing around multifamily self-storage and triple net, so I'm going to offer you a invitation to come back and talk to us about that. But to be cognizant of your time and make sure you get to tacos with the kids today,
Oh, yeah.
I'm going to switch us now into our last round. We're calling this the 5 toppings. Our first one is, what is your favorite book, or what is a book you've read recently that's given you a paradigm shift?
Oh, my goodness. So the book I'm listening to on Audible right now is called Flash Boys by Michael Lewis.
Yeah.
And if you want to if you want to have your blood boil about the stock market, you should read and or listen to this book, all about high frequency trading and Wall Street like that. And I'm not one of those guys that trash Wall Street like all day long. I still have a 457. I'm still invested in equities and bonds and all stuff like that. But it's eye opening. But the best book, my favorite book that I usually read and or listen to every year is The Wealthy Gardener by John Soforic.
Okay. I haven't heard of that, so I'm going to have to look at that. Our second one is, I believe that the person you become 10 years from now is directly correlated to the habits that you have and the things you do every day. What are some of the habits that you have?
I wake up early now. I wake up early. I think we were talking offline. I have 3 little girls, 12, 9, and 4. So it's got to get done early in the morning, or else it's not going to get done. So waking up early, but I also read 10 pages a day, right? And the thesis behind that, if I can read 10 pages a day, it's 300 a month. That's 3,600 for the year. If the average book is, say, 300 pages, I'm looking at 12 books a year, right? So, it's all in how you frame things. And if you can't tell me that you can wake up a half hour early to read 10 pages, I'm going to say that you're crazy, right?
Yep. Or you don't care about growth.
Mm-hmm.
Our third one is, what is the best piece of advice you've ever received?
When I saw this on the email, Matt, I had a hard time with these questions. I got to be honest with you. But I guess the best piece of advice was, you don't need a PhD to make a decision, right? You gotta, you have to get educated. There's no doubt about it. But you can't have, analysis paralysis, right? If we needed a PhD every time we had to make a decision, we'd be, just stuck in life. So I would say commit, get educated, and then take action.
Yeah, and just to add on to that, I read this in the 4-Hour Workweek from Tim Ferriss a while ago. It was like, if you want to become a 95th percentile in a specific subject, go check out the 3 top books in that subject, and you'll automatically know more than 95% of the people out there. And sometimes I feel like you do broker-dealer and real estate all day, every day, and you might even be like, oh, well, I don't know about this. And it's like, what value could I tell other people? And it's like, you do this every day. You have way more knowledge than they know. So
I love that. And I love that.
Sorry to
book,
go on
by
a
the way.
tangent.
No, it's great.
Our fourth one is, what are you most proud of in your life?
I also had shockingly, I had a tough one on this one too. But I'm a dad of 3 girls. There's no bigger love that I have than being a dad and being involved in their life. And big reason why I'm here today and not still in the level 1 trauma center as an ER nurse is because of them, seeking to serve them and bring them up right. So I guess I'm just really proud to be a dad and a girl dad at that.
Yeah, it's the most challenging and fulfilling role I've ever had in my life. And I'm sure it's the same on your side.
No doubt.
Our fifth and final one is, if you could sit down and eat a bowl of ice cream with anyone, dead or alive, who would it be and why?
I really thought about this one a lot too, and I would say it's Jim Rohn, who is a de facto mentor of Greg and I. When we got started on this journey a couple of years ago, we dove into all the classics, right? Jim Rohn, Earl Nightingale, a lot of those, self-help personal growth and development type folks. And unfortunately, he passed away, 10 or 15 years ago. But I just love his stuff, right? Sometimes when I wake up early and I get my 10 pages in, I might hop on YouTube and watch one of his speeches or, download some of his audio. And he has timeless information that I think I just would really like to hear, firsthand.
I love it. Actually, 2 for 2 this week. The last podcast I recorded this week, they said the same thing. And I'm a huge Jim Rohn fan over here.
Big
well,
time.
Tim, fantastic conversation. I'm sorry we didn't even get a chance to talk about all the different asset classes that you're in. But if our listeners wanted to reach out to you and learn about those asset classes, where's the best place we can point them?
Yeah, I want you to call me on my cell phone. It's 516-521-7762, or head over to our website, citysidecap.com, and my email is just tim@citysidecap.com.
Perfect. We will leave that in the show notes. And then, Tim, thanks for coming on the show.
Thanks for having me.
Thank you for listening to Ice Cream with Investors. If you like what we serve you here, it would mean the world to me if you would like, subscribe, and leave a review on your favorite podcast app.